Welcome to the Ag Commodity Corner Plus. It's June 6, 2025. And our title this week is, Will a Weak U.S. High Pressure Ridge Cause a 2025 Summer Grain Rally? Well, this week, some of the highlights, there wasn't a lot of movement, but we had the winners were really livestock, hogs, cattle, live cattle feeders and live cattle went to new record highs. And stocks also continued their wall of worry climb. The S&P 500 actually broke above 6,000. I think it may have fallen back below that by the end of the day, but it's done quite well.
Well, Mo, this week, the start of the show seems to be corn futures. So this week we'll be looking at the ridge of high pressure that's expected over central U.S. by mid-June, and look at some of those spreads in the corn futures, and then look at the record big Brazilian corn crop. And funds seem to be adding a weather risk premium finally in grain markets and in the corn market. And like we always do, let's look at the stock market, see what's happening with the S&P 500. Tech is still ruling the day in terms of the individual stocks. And finally, look at the inverted head and shoulders in the wheat futures. To start our discussion today, Mo, so there have been a few weather forecasters recently who've been talking about that ridge of high pressure over the Midwest, expected towards the middle of this month, and that is expected to bring high temperatures and dry up things a bit for corn country. But the intensity of it depends on who's talking and which forecaster is coming up with those numbers.
Yeah, you can see from this chart, Abhinash, this is from March 7th of 25 to June 4th of 2025, the amount of moisture that the U.S. Midwest has gotten. And there's been a lot of fanfare, headline news about the Southeast. That dark purple is extremely flooded areas of 20 plus inches for the entire 3 months. So we've had plenty of moisture the last 3 months. And as you've mentioned, there's this high pressure ridge that a lot of weather forecasters have been forecasting here over the last month or so for that end of June, July. This is the Euro model. So there, in weather models, there's the Euro versus the GFS. There's also a Canadian model. They tend to get updated 4 times a day. Markets tend to pay attention to the midday weather model. So you can see this Euro models through June 21st looks quite wet versus this next chart, which is the American model. That's probably a little drier for that Western Corn Belt, but the Euro model has actually been more accurate than the American model. And this is Crop Profit. Crop Profit is another entity that tries to project yield based on weather and moisture to date and so on and so forth. So they're projecting a 181.6. They're saying the national change of plus 0.6 as of June 3rd. So I agree with them. We've had plenty of moisture. There's a lot of folks that have gotten this weather wrong. NOAA was looking for dry May, and it's been very, very wet. There's a lot of forecasters, experts talking about the 89-year drought cycle. We don't think it's the 89-year drought cycle. Month of June is key for the summer months. We were one of the first to talk about the 89-year drought cycle in 2019. I think it's been delayed to 2026 or 27. The moisture short term is favorable enough that you're going to see crop conditions in Monday's USDA crop report to improve. But long term, as you get into that middle of May, end of June, will that high pressure ridge, it's a weak one right now, according to Drew Lerner. Some think it could come in strong. So it depends how the intensity. We need a doom of dome for July 1st, and maybe we can get the funds to start covering that very large. It's starting to become a very large short position. We'll get to that here in the end.
Well, all of that weather seems to be providing support for the corn futures. But on the other hand, we're seeing some bear spreading in corn futures, which means that you've got the December contract now creeping higher. So the spread between the July and December back in Feb was about 40 cents. Currently, you've got December climbing higher, so it is a plus around 7 cents as far as December is concerned. And some of that has got to do with the bigger than expected US corn crop for both old crop and new crop, and also the bigger Brazilian corn crop.
Yeah, unfortunately, despite those stronger exports that everybody's been talking about, and they're all looking for the USDA to lower ending stocks next Thursday, June 12th, with the June crop report, because they'll increase that export pace. It's still up 27%. The funds have ignored it, largely because they know that there's some large crops coming from both the U.S. and Brazil, unfortunately.
And specifically, Mo, looking at the December corn crop, seasonality finally seems to be at play. I mean, we know that it's during this early summer to midsummer when we get that seasonal play in corn futures, and we can see a pop in prices. So finally, funds seem to be buying into this weather story as far as the ridge is concerned, and pushing corn futures higher.
We need to break on the chart. You can see the double bottom, but we need to break that neckline, that resistance at 450. And then you can see the other two highs from earlier in the year, one in April and one in February. The one in April was 470. The one in February was 480. And we're approaching that 200-day moving average. So no longer are we oversold. We're probably fairly valued at this point based on what we know. So we're hoping for a spark. Maybe it's weather. Maybe it's a Chinese trade deal. We'll get to that here in a second. But seasonally, this is if it's going to happen, it's going to be a late corn rally. It's not uncommon. So we'll see what happens as we end the month of June. Don't forget to try our program. This week's Hot Topics, we were talking about the technical change in trend on hogs. You're going to have to sign up to figure out whether it's up or down and what our targets are for hogs. But we've also talked about the Canadian wildfire impact. We did a lot of analysis in 2023. I think it's a repeat of 2023 and 25. And try our program and you'll find out whether there can be an impact on grains during the development and also the pollination stage.
Mo, guess what is the start of the show as far as these financial markets are concerned? It's that continued strong story in stock futures, or rather stocks and the stock indices. So you've got the S&P 500, which has crept up above 6,000 again. And a lot of that has to do with Q1 earnings from those companies that reported. And also today we had a stronger than expected jobs report that came out.
Yeah, the stock market's been pretty resilient. Again, as we said earlier, climbing that wall of worry. Where's the 90 trade deals in 90 days? I mean, have you seen any? I don't know. I mean, Trump claims we had that UK trade deal, but that was more of a framework. However, breaking news late today as we were taping this is that China and the U.S. are going to meet on Monday in London, and I guess Japan is meeting up with the administration for the fifth time to try to iron out a deal. So maybe some more good news there going into next week. You add some trade deal news, maybe some details that we've been lacking. We've talked about this on end for the last 10 podcasts, and maybe get a little bit of a weather scare, and that you can add the two together and maybe get that spark, that fun short covering rally. In the chart, you can see that the Mag 7 still rule the day. These are the Magnificent Seven, the big tech stocks like Amazon, Apple, NVIDIA, Tesla. They added $4 trillion in market cap since the April lows. It represents a good chunk of, I think, almost 50% of the S&P 500 index gain in capital Just quite amazing. And their earnings were up 27%. So the seven stocks within the S&P 500 were up 27% in the first quarter versus the 493 stocks that were up about 9.4%. So you get the average of about 13%, which was better than expected. Everybody was looking for about 9 to 10%. So quite an amazing run here. Both the U.S. consumer, the economy, and earnings have been more resilient than most people thought.
Well, Mo, let's touch upon some of these wheat futures. We spoke about corn. Wheat actually started things off with that lower than expected conditions report that we got from the USDA. And as you can see there on the chart, that looks like a bottom formation in Kansas wheat, and you can possibly see the same in all the other wheat futures as well. So a lot of the bearish news seems to be baked in. And wheat futures are joining the grains rally.
Yes, so do you agree that we've had a 3-year bear market? You think all the bearish news is finally in?
I think as of now, a lot of the bearish news is baked in, and like we can see, I think all of these grains will hop onto that ridge story for now, that weather premium that the funds are trading on.
I'm a little concerned about the harvest. It can be a headwind, but technically, this may signal a bottom. So on the Kansas City chart you're seeing here, if you're watching the video, if you're listening, there's a neckline resistance at 450. 545. And then if we can break that neckline, which we haven't done yet, Minneapolis wheat is the only one that's done it today. So that's on a weekly basis. That's very positive. Then comes the 200-day moving average at 582 and 3/4. And then, of course, there's that February high above $6. You can also see here in the Chicago wheat daily futures chart that head and shoulders bottom. They also call it inverted head and shoulders bottom formation. The 200-day moving average comes in at 5.776, and then that February high comes well above that 620. And then finally, if you get to these, if you get back to that February high, it's a selling opportunity in wheat. And then Minneapolis wheat, like I said earlier, it's the one that's ahead of the other two. And we're breaking the 200. The 200 on Minneapolis comes in at 6.263. And then, of course, that February high takes you all the way back to 672. So look for that over the next 30 days. And in fact, that 632 is not that far away considering where we closed today.
Well, Mo, it was Minneapolis, just to touch upon, your discussion there regarding the wheat. It was Minneapolis that actually led following the USDA crop conditions report. We had a bit of an improvement in this week's report. Let's see what happens next week.
Well, and you need to also worry about Western Canada, all the wires, the dry weather. It's early. If you go back and do a comparison to 2021, which I think is a repeat in Western Canada, conditions were about the same where we're at today. So I think by July 1st, both in the U.S. and in Western Canada, we could get some fireworks.
Finally, let's talk CFTC, and we had the latest report come out today, just before we started. So you've got corn, which is more selling in corn and all those grains. So corn is currently over 150,000 net short. The funds are net short in Chicago wheat, close to minus 100,000, sorry. And soybeans are net long over almost 9,000 contracts. But the stars there continue to be canola, which is close to net long record territory, and the livestock futures as well.
In real time, because of this week's trade, I would think that minus 154 in corn, they probably covered some of that with a little bit of the rally. It depends, because you've got July weakening and December gaining. Yeah, the funds reduced some of their they reduced some of their position canola because of the drop in prices because of soy oil. Soy oil was weighing on the complex this week, but we did have a rally today in soy oil, so that helped canola rally as well. And then, of course, again, as Abhinash said, the stars remain livestock. We're not near record highs in both lean hogs or live cattle, but feeder cattle are pretty close. And of course, the funds were buying crude, approaching that $65 ceiling. So that was your old support, now a ceiling. If you get some good news on trade deals, I got to think crude oil is going to continue to move higher. But I think long term it can still come back down. Well, folks, thanks for watching. Remember, if you're an Ontario farmer, don't forget to join our 2025 Great Ontario Yield Tour. We got 2 events to that in August. And as well, don't forget to sign up, subscribe to our podcast. Remember to click on all so you get the notification when the next one is up. And until next time, take care.